What's driving the slump in Bitcoin right now?
Yeah, I would say, right now there's a lot of correlation with COVID, as you mentioned, in addition to year end. As we look at all of the funds and institutional players that are closing their books towards the end of 2021, heading into 2022, really the biggest thing top of mind is accounting. And so what
Hmm.
we've heard from our clients is that, we have, institutional clients working with the top four accounting firms, and those firms are looking to have everyone close their books, take trades off, and move funds into cold storage in order to account
What,
for those clean balances.
what does that mean exactly? Cold storage. Can you explain that?
Yeah, absolutely. So imagine if you have a running TWAP or if you have a running algo or position that is trading every single day. What it means is you're going to take that position off and you're going to basically close your book. So you're going to take it off exchanges. And this is where you've seen
Hmm.
a lot of the outflows of exchanges. You're going to put it with your custodian and you're basically going to unhook it from the internet. And that's really what cold storage is. It's going to be either on your USB drives or with an institutional custodian provider.
That is a fascinating point that, the fact that accountants are basically dictating that, their clients move into cold storage. Do we see this at the end of every year, or is this a new dynamic?
Very much a new dynamic. This is the first time I've seen it at scale with both our clients and just, in terms of what's happening in the market at large. I think, this is just an institutionalization of the space and really, hopefully, maybe more to see in the years coming with more of this as well.
Look, a very general question for you. It's one I've been asking a lot of our guests this week because of what we got from the Fed earlier this week and the lack of movement that we've seen higher from crypto. I'm wondering how you think of Bitcoin, for example. Is it an inflationary hedge? Is it a store of value like gold? Is it digital gold? What exactly is it?
It's very much an inflationary hedge and a store of value. I think that narrative still exists with institutions today. That said, we don't have, the number of institutions on our desk. They no longer just trade Bitcoin and they no longer just trade Ethereum. And so I think today, we've seen institutions start to diversify tremendously across, outside of those two coins. And so we've seen interest move away from just that, store of value, inflationary hedge narrative.
And so I want to talk about leverage because you see this interesting dynamic sometimes in Bitcoin sell-offs where, a few people get liquidated and then it turns into this entire cascade where you just see sort of this daisy chain of liquidations. And I'm curious at this point, I heard that explanation a lot for that weekend flash crash that we saw about 2 weeks ago. Is that still at play or have we moved beyond that?
We have moved beyond it. The deleveraging happened, as you mentioned, 2 weeks ago, and it really impacted Bitcoin. I think what we saw was Ethereum held pretty strong, especially year end relative to where we started in the year. And we've seen that leverage completely get wiped out as the system. Open interest still isn't back to levels that it were previously. And so I think there's a lot of bearish sentiment right now. The market's trying to figure out kind of where its footing is going to go into the new year. And I think another thing, too, is we've seen more correlation with traditional markets, as you mentioned before. And so the big question in everyone's mind is when are institutions going to put risk back on in 2022?
And well, let's talk about 2022 because we're less than 2 weeks away. And I'm curious, when people start paying attention again, January 2nd, January 30th, maybe some of those accounting pressures.
Katie, that's my birthday.
Really?
Yeah, January 30th.
Well, I meant to say January.
You meant to say happy birthday. Okay.
I meant to say something. It wasn't what I said. But in any case, when we're finally into the new year, some of those accountant-driven flows maybe have worked themselves out. Do you expect sentiment, open interest to rebound, or is there something more at work here?
I think right now the biggest key and metric that I'd be looking at is just supply on exchanges, because the less supply there is on exchanges, the more volatile these moves are going to be, and the more you may see another flash crash in the future. And so really all eyes, personally, I think that, come January 4th, everyone's past the holidays, and you can start to open your books again. The book starts fresh at that point. And so institutional investors and LPs are going to be asking their funds, what are the returns that you're expecting Q1? And so we'll continue to see people put that risk back on. I think at that point, given the correlation with traditional the Fed as well.
Hey, I have one last big picture question for you. A story that caught my eye earlier in the day comes from our own Lizette Chapman, who covers venture capital. And she wrote about Sequoia Capital finally getting, quote, red pilled when it comes to crypto investing. It made me think of the maturity of the space right now. And I'm wondering if we think about equities and we think about fixed income, where they are as far as assets go and asset allocation goes, where are we with the maturity of crypto?
I can't emphasize enough that we are really seeing traditional institutions entering the space. I think you just saw KKR invest in Anchorage, you saw Thoma Bravo. These are very traditional private equity shops that are making their first or even second investment into crypto, which is a huge, huge sign for the space. And so I would say we're very, very much in that pace of maturity. People are very much on the institutional side. We've gone way past institutions just investing 1% of their portfolio at this point into crypto. It's closer to 5 to 7% at this point.